Many investors are focused on American-based airlines right now, like the big names, Delta, United, American, Southwest. However, there is one large airline company outside of the US which may interest a lot of you, and I know a lot of you have been asking about in the last few weeks. That company is Air Canada, and it's, of course, as the name implies, Canada's largest airline. So let's spend some time today looking into the valuation here of Air Canada, see if the stock is a potential good buy for the long term, and then I'll share with you if I plan to buy Air Canada at the end of this video. But as always, guys, hit that like button down below. You guys have been showing amazing support on the channel recently, so let's keep that up and let's try to get 700 likes on this video. So Air Canada is Canada's largest airline company. And guess what? The global issue that's hurting the US is also hurting Canada. As a result, all the US airlines are hurting, and Air Canada is as well. Most recently, the company announced that they are temporarily cutting their workforce by a whopping 16,500 employees as they prepare to reduce their capacity by 85 to 90% until June. Now, this is going to have a massive impact on the company in 2020 and may put them in a tough position, which I will discuss in more detail shortly. Now, being such a crucial company to Canada, the Prime Minister has come out and publicly acknowledged that the government knows Air Canada is hurting and that they will do more to help the industry, but he wasn't specific as to what exactly they will do. Now, I imagine it'll be very similar to the US, where the government gives the companies a loan and essentially bails them out through this tough time. We'll probably get more details on this soon on how the government plans to help Air Canada here, but I do want to make it clear and kind of go through something right now on what this company went through back in 2003. This is not the first time Air Canada is facing tough times and where debt is a major issue for this company. Sure, the issues surrounding the cause of their struggles right now is different from back in 2003. However, the base of the problem, the core of the problem, is that their debt load is too high and they may not be able to sustain that to keep them afloat for even the next year or so. Back in 2003, the company filed for bankruptcy protection, also known as Chapter 11, and was able to get that approved. They came out of this restructuring stronger than ever, and things looked good for the business. However, existing shareholders who held the stock before they went through Chapter 11 essentially got their shares wiped out to $0 and lost 100% of their investment. So this was clearly not a fun time for many investors, as even though Air Canada came out of these tough times, Chapter 11 essentially wiped out all existing shareholders. Then again in 2009, Air Canada faced some struggles during the financial crisis. However, this time the government stepped in and assisted the company. They gave them a $1 billion loan, and up to $700 million of that had a minimum interest rate of 12.75%. So it was a hefty price to pay, but Air Canada accepted this offer. This time, however, shareholders were not left out to dry, as they were able to ride through the storm and eventually stuck around for the ride as Air Canada stock and company recovered. Now, it did take a long time for the company to get back on its feet and actually become financially stable again. However, shareholders who held through were eventually rewarded as the stock started to recover and eventually surpassed its previous highs just a decade later. In hindsight, this would have been a golden opportunity as an Air Canada shareholder to be able to snatch up shares at 70 cents a share at its bottom, and a decade later have it at over $50 per share. Many people got filthy rich from this investment. However, hindsight is 2020, and you have to think about the circumstances at the time when the shares were trading under $1 a share. Now, the mindset in 2009 was that just a few years before, in 2003, the company filed for Chapter 11 and all shareholders lost their investments. So naturally, many shareholders who were holding the stock in 2009 went out there and sold their shares in fears that this could happen again. However, this time, because the government stepped in, things were different for the company, and now looking back, this is probably one of the best investments you could have made back in 2009. So now this brings us to today. Again, Air Canada is going through some struggles here, but now it's a question of whether we're going to have a repeat of 2003 or 2009. Is the company going to file for Chapter 11 and existing shareholders get wiped out? Or is the government going to step in here and give this company another loan? I don't know the answer yet. There's nothing clear on what's going to happen yet. However, based on what the government's hinting at, it looks like a loan is probably coming here for Air Canada. If this happens, then the existing shareholders should be just fine. It'll probably take the company a while to repay back that debt and get back to its highs, but at least existing shareholders won't lose all their current value. That's just my 2 cents on what could happen and what I think is probably going to happen with Air Canada. But now let's spend some time looking at the fundamentals of this company to figure out if it's even worth an investment. So here's a business today sitting at under a $3 billion market cap. And also note that since this is a Canadian company, you can trade it on the TSX in Canadian dollars under AC. Or if you're in the US, you can trade it on the OTC in US dollars under ACDVF. The business also employs nearly 30,000 people. However, like we just saw, they temporarily cut over half of them recently. Now, in terms of growth, Air Canada was actually doing just fine until this whole global issue hit, which of course will impact its forward growth numbers. Year over year, though, this company grew by over 6%, and the last 3 years have been over 9%. So it's safe to say that the business was doing pretty well until recently. Now for the next year, revenues are expected to decline by 2.57%, but this is going to be much, much worse now that they've actually cut 90% of their planes until June. And just remember that any kind of forward-looking predictions for 2020 is not going to be accurate in my opinion. Now with any investment, high profits and profit margins are expected, and Air Canada does quite well on this front. Gross profit margin come in at 32%, net income margin, although not that great, comes in at 7.72%. I like to see double digits here for net income, but the reality is that the airline industry as a whole isn't as hugely profitable due to all the costs that they incur. Now, all of these margins translate to some pretty decent incomes here for Air Canada. In 2019, they had nearly $15 billion in revenue and $1.14 billion in net income. It's not the best net income again considering the revenues, but again, the airlines are not known for massive profits. And guys, just like its American counterparts, Air Canada is guilty of buying back their shares in 2019 and spending $378 million in repurchases over the year, which in hindsight was yet another poor decision by yet another airline company. And it's not like they had a phenomenal balance sheet either to go ahead and do these buybacks, so in my opinion, they should not be buying shares back with their cash. They currently sit with $4.54 billion in cash, but over $7 billion in long-term debt, and out of that debt, around $4 billion of that is due in the short term. This of course puts them in a very tight position because with other expenses, they will not be able to sustain their short-term obligations with the cash on their balance sheet. However, had they saved that $378 million from share repurchases last year, it would have given them that little extra cushion here, which could have ultimately put them in a much less stressful position compared to what they're facing right now. I feel this was completely irresponsible of them to be spending that much in share buybacks with such a big debt load in an industry that has shown to struggle during tough times. I mean, we saw the history. The company went through Chapter 11 in 2003. The company had to get a loan in 2009. So you would think after those two things that they would learn and actually save cash when possible, but that's not what they did. You also got to remember that we were in a late stage in an economic cycle here from the last recession, so Air Canada should have really been more diligent here, and honestly, I lose confidence in the management team with these poor decisions. The company also made some major assumptions in the last earnings report, which unfortunately for them have not played out very well. They assumed modest GDP growth in 2020, so yeah, that's not happening anymore. In fact, we're going to see some major declines, probably the worst in history. Next, they assumed the Canadian dollar would trade at 133 to the US dollar. Yeah, so again, that did not happen as that spiked to over $1.40. They also made some assumptions on jet fuel costs, and lucky for them, this has actually come true and it is cheaper than expected. But the problem is people aren't flying and 90% of their fleet is going to be grounded. So even with lower prices, there's no demand and they can't take advantage of this. And finally, they assume some 737 MAXs will be delivered this year. But honestly, that's a non-issue for them right now considering flying demand is grinded to a halt. So kind of the way I see it, all things considered, looking at the fundamentals, the balance sheet isn't too horrible. There's much worse balance sheets that we've seen. A lot of the airlines in the US have much worse balance sheets than Air Canada. So on a fundamental level, it's okay. I also strongly believe the government's going to step in here very soon and give this company maybe another $1 billion loan or a couple $1 billion loan. And I think that should probably lead to some sort of a relief rally here in the stock as it brings back more confidence that the company's going to get through these tough times. However, if you are buying Air Canada today, you have to understand the risks. The way I see it, there's three main things that I would be thinking of, and you have to be pretty confident being okay with this stuff. So the first is, what if this global issue continues on for longer than expected, maybe even a year or two? Is this company going to survive? The second is, what if the government does not step in and give them a loan? Will they survive? And the third is, if they don't get any assistance and they have to file for Chapter 11, are you okay with taking that risk of potentially wiping out all your shares? As with a lot of other airline companies and cruise line companies and maybe even hotel companies, this is a very tough position to be in as an investor, but all things considered, and if you weigh the probability here and the pros and cons, it may make sense from a risk to reward perspective here to actually make an investment in Air Canada. Guys, as always, my videos are not investing advice. I am personally not going to be investing in Air Canada. I am not a huge fan of the airline industry in general. And again, I've covered this before, but my play for this sector really for, flying and air travel, that kind of stuff, is through Boeing. I've made some videos on that, so if you're interested, check that out. And I think Boeing's at a good valuation right now, and I think that company will get through these tough times. But these airlines, not 100% sure. Either way, guys, if you enjoyed this video, let me know in the comment section down below. Also, let me know if you're buying Air Canada stock or if you think another airline is more attractive than Air Canada. I'd love to hear your thoughts. Don't forget to hit that like button and subscribe if you're brand new here. But either way, I'll see you in the next one.